The fine print. Pages of legalese, of jargon, and tiny font. An insurance policy is something that we all own, but for some reason, just don't read it, let alone understand it. But what happens when that one clause that actually matters is the one you skipped? I'm Andrea Heng, and this is the Money Talks podcast. Hands up, how many of you have actually sat down to read your insurance policy document? My hands are down because I've not read my insurance policy documents, and I think this is quite dangerous, don't you think? We buy insurance for peace of mind, but that peace of mind often leaves us the moment we try to make sense of the policy document. It's dense, it's legalistic, and frankly, quite intimidating. Eddy Cheong is sitting next to me. He is the CEO of Heaven. He is here to help us decode the fine print. Welcome to the podcast, Eddy.
Hi, thank you for inviting me, Andrea.
Yeah, we've spoken on a few occasions before about insurance, but this is a pretty different one because it's about reading the fine print of your insurance policy. So before I go into that, when you sign up for a new insurance plan, what's the first thing that you do?
All right. Recently, I just bought a policy for my kids.
Okay.
All right. It's a critical illness plan, and it runs to 76 pages. So
76
yes, that's a lot. Yes, but nonetheless, it's important to look into the fine prints or to read the documents because otherwise, you may not be aware of what is covered, what is not.
Okay.
So maybe let me explain how to make sense of insurance policies.
Yes, please.
Okay. So typically insurance policies has 3 sections. So the first section is called the policy schedule.
Okay.
So it is found in the first few pages. It basically describes what is this policy for, who is it for, and it lists down the benefits that this policy is covering. For example, the death cover, the critical illness, the riders.
Okay.
All right. Then it describes how long this protection will last. Whether is it a limited period, say until 60 years old, or it's a lifetime policy.
Hence the schedule.
Yeah, that's right. And the third thing is basically the premiums. How much are you paying for it, and for how long? Because it could be a limited period or it could be a lifetime period.
Okay.
So the second section, which is the next section, is basically the general T&Cs.
Okay.
It describes what are the rights as a policyholder. So, for example, the right to pay the premiums, the cancellation, the termination of policies. One of the things that is a right is called the 14 days free look.
Okay.
Okay. So this is found in all insurance contracts.
Yes, I've always wondered what that is. A
Yes.
14-day free look.
That's right.
Okay.
So basically, it's to guard against buyer's remorse. After you buy this plan, you feel that it actually doesn't really make sense.
Okay.
You look through a schedule, actually that's not what you want.
Okay.
Okay. You can actually tell insurance company that I want a refund.
Okay, so
Okay.
cancel.
Yes, cancel.
Balik. Restart.
But within 14 days of being issued the policy.
Okay.
Okay. So the refund will minus off certain small expenses, like if there's medical examination done for it, it will minus off that. So
Right.
by and large, the premiums will be refunded. Then the final section is with the meat of it. It basically describes what the terms and conditions of the benefits you sign up for, the critical illness, the whole life, the riders.
So what determines
Yeah.
what is a critical illness,
Yes.
what is a permanent
Yes,
disability?
what the critical illness covers, how many definitions, what constitute a claim.
So it's like
what
a
doesn't cover.
glossary?
No, it's more than that. There's some glossary in it, but it describes whether this condition is claimable. What the limits of it, any exclusion. So in this section, there are also some things that you need to familiarize with. One of the things is surrender value.
Yes.
Yes, not all policies have cash value.
That's right.
Okay, for example, term plans don't have cash value. Hospital plans doesn't have any cash value.
Yep.
But you buy a whole life plan, endowment plan, or investment linked policy (ILP).
Yep.
Okay, that is a cash value. So when you surrender this policy, there is a surrender charge.
Okay.
Okay, so people need to be familiarized with.
Got it.
Especially nowadays, people tend to buy investment-linked policies. There is this what I call a lock-in period.
Okay.
Most people may overlook that. The lock-in period can be as long as 25 years.
Wow.
Yes, it can be as short as 5 years or 25 years.
Yes.
So what it means is that if you buy a plan that is locked in for 25 years, if you decide to surrender, there's a penalty that's being imposed on.
I see. Got it. Yeah, I'm familiar with that. But wow, 25 years. I've only heard of like 5-year ones.
Yes.
So you said that the third section
Yes.
is the meat of the policy document. So what exactly am I looking out for here? What should I be paying more attention to?
Right. So it will explain what are the insurance benefits that you sign up for. For example, if you sign up for a critical illness plan.
Yes.
Okay. So there are many types of critical illness plan. There are early stage critical illness, late stage critical illness. So all these critical illness definitions will be listed out. So this is important because in the event of a claim, okay, the underwriters will look at this definition and see whether it is satisfied.
So I want to talk about, when you're reading these things and you gave us some tips on what to look out for, right, in the policy document, particularly the definitions of what you're being covered for. If I look through my policy, what are 3 red flags that I should watch out for in any of these sections to understand limitations, for example?
All right. So it really depends on which policy you sign up for.
Okay.
Because we have hospitalization plans, critical illness plans, we have disability insurance plans, travel plans, and so on and so forth.
Yeah.
So every type of plans have their own fine prints, red flags. So, for example, if you are looking at a contract for hospitalization plan, the integrated shield plan, IP plans, okay. So one of the clause that is very important to note is this called the medically necessary treatment. Okay. So it's a standard clause.
Okay.
So what this means is that the insurance company will pay as long as the treatment is necessary. It is reasonable, necessary, and it means that it will comply to the general accepted practices of the medical standards. Okay. So if it's necessary and if it's not too expensive, it will be payable.
Okay.
So what this means is that if I go for a treatment and it is for health screening.
Yes.
Okay.
Yes.
I just want to check, make sure that my colon is okay.
Yeah.
Okay. To colonoscopy for no apparent reason, just to make sure that I'm okay.
That's
right?
not payable.
That's not payable because that's not necessary. It's just for your own health screening purpose.
Right.
Yeah. So for critical illness plans, there are some things to look out for.
Okay.
One of the things to look out for is what I call a waiting period. So when you buy a critical illness plans, the first 90 days of the new policies are not claimable.
Oh,
okay. Yes. For certain conditions.
I remember this.
Yes. For it basically relates to cancer. Major cancers as well as heart-related conditions like coronary bypass, endoscopy and stuff like that. Okay, so this will not be covered in the first 90 days.
Got it.
Okay, so what this means is that if let's say you are replacing a policy for whatever reason, you have one critical illness, one you don't like it, you want to buy a new one.
Yeah.
So don't be so hasty to terminate the old one first.
Oh.
Okay, so you buy the new one and you keep it for at least 90 days.
Okay.
Then you surrender that. Because otherwise there will be a gap of 90 days.
Right.
There's another part of critical illness that most people overlook is this called survival period.
Oh.
Yes. So survival period basically means that when you have a critical illness policies and you want to claim a critical illness, there's a diagnosis. There's a diagnosis of critical illness. Okay. The insured has to survive for a period of time. Typically 7 days to 30 days, depending on the contracts.
So, not to sound morbid, but you literally cannot die.
Cannot die, yes.
Within this time period.
That's right.
To be able to claim for the
critical illness.
Critical illness
That's
treatment.
right, yes.
Wow.
Yes. So, if the person passed away before the survival period, then the critical illness benefit will not be payable.
Okay.
If there is an underlying death cover, then you pay the death cover.
Okay.
Yes.
Understand. What about TPD, total permanent disability? I personally have a little bit of an issue with TPD insurance policies because when I read the fine print, I do read a bit of the fine print.
Great.
It tells me that there are actually very specific definitions as to what is a permanent disability. Like it goes right down to limb measurements almost.
Yes.
Talk to me about that. I mean, is that also something we should be very mindful of? And do different TPD policies differ in terms of their definition?
There is slight difference.
Okay.
So when if you bought an old policy, because TPD definitions has evolved over the years.
Got it.
So say you have a policy like say 20 years ago. Okay, the definition of TPD basically it means this. It means that the loss of use for any two of these 6 items.
Yes.
Okay.
Yes.
The loss of use of eyes.
Yes.
Either one or two. Okay. Or hands above the wrist.
Yes.
So fingers doesn't count.
Yeah.
It must be above the arm.
Yeah.
Right. And then above the ankle.
Yes.
So if let's say there is a loss of total use, total, not just partial, total, one blind and one arm. Okay, it is considered you satisfy 2 of these 6 limbs.
Got it.
And then TPD will be paid out.
Okay.
All right. So that is the very old definitions of TPD.
Yes.
Okay. Some old definition require it to be severe physically. Okay.
Yeah.
But that's very quite a strict definition. Some is just loss of use.
Yeah.
Okay. So over the years, the TPD has evolved.
Okay.
So now the TPD includes things like the definitions found in ElderShield and Casual Life.
Right.
The inability to perform 3 out of 6 of the activities of daily living. So let me give an illustration.
Sure.
So from the moment you wake up all the way to your eating, you need to perform 6 items, 6 activities.
Yeah. Who would have thought it would be broken down that way,
Yeah,
right?
yeah.
Okay.
So
So,
we-
when you
we-
get up,
Yeah, so when you get up, you come up from the bed.
Yep.
Just transferring
That's
from a
one.
different height. Okay,
Okay.
number 1.
Okay.
You walk to the toilet. It's mobility.
okay.
Number 2.
Okay.
Then toileting.
Okay.
Okay, toileting, and then you washed up.
Yeah.
Okay, then you dressed up.
Okay.
Okay, after dressing up, you go to the kitchen and then make a meal and then you feeding. So these 6 items, as long as you can perform 3 out of 6 items, this person may be able to claim the TPD.
Okay, that's okay. And that's more versatile. Also, it's a bit
That's
more
right.
flexible and more leeway, I
Yes,
suppose,
yes.
right? One common point of confusion when it comes to critical illness coverage, right, is whether the policy covers me at an early stage of disease versus only the advanced stage. And I know in the fine print it says this. I also know that there are very specifically early CI plans, early critical illness plans, and this covers from pre-diagnosis or just at the point of diagnosis to stage 1 or 2. So can you clarify this for us when it comes to the fine print?
Oh yes, so critical illness is by far the most varied kind of policies you can find.
Oh,
Okay,
I
so
didn't know that.
so there are 2 types. One is called the advanced stage CI.
Okay.
These are basically the older plans. Okay, but you can still buy it now. Okay, so these plans there are about 37 critical illness definitions, and these are standardized
Okay.
in Singapore.
Okay.
So whether you buy from company A or B, it is the same definitions. So so the standardization creates this certainty so that it won't be a case whereby you go to company A and company B, the outcome is different.
Yeah.
Okay? So the advanced stage critical illness has been standardized.
Okay.
Over the years, in the recent 10 years or so, 15 years, we have this called early stage critical illness because people, maybe there's a demand for that. So for example, instead of cancer of a certain severity, early stage carcinoma in situ, you can actually start claiming. Okay.
Oh.
Yeah. So for this early stage or intermediate stage critical illness, these are not standardized. So it really depends on how insurance company were to define them. Okay, and that is where sometimes you hear of cases. How come company A can claim, company B cannot claim?
Yes, I've heard of that. So when considering and shopping around for a CI plan, this is what I need to do. Can I get the fine print before signing up, or is that what the 14-day period is for, right?
Usually, if you talk to the agent or advisors, they will go through a product illustration.
Okay, at the point of consideration, right?
That's
Not even
right.
purchase yet. Okay.
Yeah. So maybe to give an example
Yeah.
or different. So maybe I use a very simple example. A coma. Okay, for advanced stage conditions, the coma needs to persist for 96 hours.
Okay.
Okay, that is for 4 days.
Okay.
A person persists in the coma state for 4 days. Okay, and two other things need to happen. Firstly, the person needs to be under life support.
Yep.
As well as there's some damage to the brain.
Okay.
Okay, so once you satisfy that, if you have a late stage or advanced stage critical illness, you pay out a claim.
I see.
Okay.
I see.
Then second thing is that if let's say this person has a early stage critical illness, the definition won't be so strict. It won't be the 96 hours.
Right.
It's 48 hours, 2 days. Okay, so a person persists in having the coma state for 2 days, and then the early stage will pay out.
I see.
Okay. So if the person wake up on the third day,
Yeah.
right, then early stage policies will still pay a claim,
Okay.
but the late stage doesn't. Yeah.
Okay. Thanks for sorting that out. I think I got that.
Okay.
This is why reading the fine print matters, right?
Oh, but then again, I just remembered there is an exclusion for that. So there are a lot of fine prints here. So the exclusion is that, well, if this coma is due to an abuse of drugs or alcohol, then it won't be covered.
Because that's kind of like self-inflicted,
Self-inflicting,
right?
that's right.
Okay, yeah, that's good to know. So normally when we file a claim, right, these benefits or the payouts will only come to us after a waiting period. Are these waiting periods standard in the industry, or do they differ according to claims, different companies as well, or different policies?
Okay, so this is a claim process. So once you've made a claim, you file a claim, and how long will it take to pay out the claims? Most insurance companies have their own SOP.
Okay.
Okay, but I would think that most insurance companies want to pay the claim as soon as possible. I would like to think that. Okay, as long as the facts of the case, the information is provided sufficiently and on time.
Okay.
This is what I discovered. Sometimes the claims may take a little while because, there's a need to get a doctor's report, and the hospital is taking their own time to give the report, or maybe some of the things are not filed properly, or it could be there are some contention regarding the claims.
Okay.
For example, this person might have a pre-existing condition. Before this person buy a plan, there's some pre-existing conditions. So there could be some exclusion. Okay, so there may be a decision to see whether is this exclusion applied to this claim.
Got it.
So typically, if the claim is very clean, it should be quite fast.
Okay, so there's also this thing called guaranteed cash value and non-guaranteed cash value. What's the difference?
Okay, so what is guaranteed is guaranteed. It is due. It is contractually committed to give to you. So this refers mostly to policy with cash value.
Oh, I see.
Yeah. So for example, you buy an endowment plan or whole life plan. So in the illustration, it will show, okay, as you progress along the years, this is the cash value that's guaranteed. This is non-guaranteed.
Understood.
Okay. What is guaranteed? The insurance company is committed to pay. The non-guaranteed, it depends on the performance of the insurance, how they run the life funds, the premiums. Okay, if they do well, they pay more in terms of bonus. So the non-guaranteed portion, you take it as a reference point.
Understood.
Okay, because if they do well, you get close to that. If you don't do well, if it doesn't do well, then you will get lower.
Okay. It's just a guideline.
Yeah,
Okay.
kind of.
Ballpark. Okay. In some policy documents, we see things like any occupation versus own occupation. So help me understand any occupation versus own occupation. Why one can actually lead to a successful claim more than the other? Which one is it?
So this is basically for a specific plan. Typically, it's found in what you call disability income insurance.
Okay.
Okay. So maybe some background of this plan is that this plan is meant to protect an income earner against the loss of income due to inability to work.
Got it.
So what it means is that if the person is not able to work, okay, the policy will pay a claim.
Got it.
Okay, but this definition of work is actually quite subjective. Because there are so
Yes.
many different kind of work, right? In
Yes.
this world, okay?
Yeah.
Produce your host,
Yeah.
okay, me running insurance company, different.
Correct.
So it's very hard to define. So the way the insurance company used to define is using the occupation definitions.
Okay.
Okay. So you mentioned there's a own occupation and there's any occupation.
Mm-hmm.
Okay. For own occupation, how it's being defined is that if a person is unable to work or perform work in his own occupation, or technically material duties of his own occupation, and most of the things that he can't do.
Okay.
Then if these benefits will pay a claim.
Okay.
So for example, if let's say a surgeon, his hands are shaky, he can't be a surgeon, all right? Then this policy will pay.
So if my voice box gets completely damaged, I can't be a presenter anymore. I can't speak.
Yes.
I get a
Then you
payout.
have this plan, you pays out a
Okay.
claim. And usually the payout is in terms of a monthly benefit.
Yes.
Maybe X few $1,000s per month. Okay, as long as the person cannot do that,
Yeah.
it pays out.
Okay.
Okay, this is by far the most lenient way of definition, and a little bit more pricey.
Okay.
The second definition is any occupation, but not any occupation. So the any occupation is defined this way. Okay, the person cannot work in any occupation that is suited for his education, what he studied for.
Right.
Okay, train for, or has experience in doing all these years.
Okay.
So what this means that, let's say I use the surgeon case,
Okay.
and he has this definition, okay, he can't do the surgery, but he can do a clinical, he can do a consulting work,
Yeah.
okay.
Yeah.
Then if he has this benefit, it doesn't pay because he still can do what he's trained for, right?
So it depends on the policy that you buy.
Yes.
Are there policies that don't have the any occupation clause?
Yes.
Okay.
But most of the time, it's a hybrid. It's a combination.
Okay, so you covered a bit of exclusions earlier in our conversation, and it really does vary, right? Depending on the plan that you buy and all that. In your experience, what are the typical exclusions that people are caught off guard, that catch people off guard?
Okay. So just now I mentioned about the medical,
Yes.
medical necessary, the critical illness, the survival period, and the waiting period. I mean, some of these things, some others would be, the common ones would be suicide clause.
Yes.
Yes. So, so the first 12 months of the policy, if there's a suicide, the death benefits will not be paid out. Okay, so that is one of the common ones. Say if you have a travel insurance or a personal accident plan, one thing to look out for is hazardous sports. Okay, because nowadays people like to go overseas,
Yes.
Japan, skiing and stuff like that, right?
Yes.
Okay.
I mean, I've gone trekking in the mountains
Yes.
of, Kinabalu and in Nepal also, and you have
Wow.
to buy specific. I realized you have to buy specific travel insurance that can cover these
Yes.
kinds of sports.
Yes, because the definition for hazardous sport differs from insurance to insurance. Okay, some are more lenient, some are stricter. But by and large, if let's say, I think a few years ago, I was bringing my family for skiing.
Yeah.
So I specifically look out for which travel insurance actually doesn't exclude skiing.
Okay.
So the type of dangerous sports that is typically excluded will be bungee jumping, skydiving, or even motorsports.
Oh.
Yeah.
Right.
So these are things to watch out for that. Yes.
Okay. Right. Yeah. Good one. Is there a specific term we should search in our health policy to see if we are sufficiently covered to seek treatment at private hospitals?
When you buy a integrated shield plan, okay, it's very important to make sure that the plan matches your healthcare expectations. Okay. So in the healthcare, there are a few categories. Okay, I mean, we have the subsidized ward, the B2C ward. That one don't have to buy IP.
Yeah.
You just buy Medishield Life. That's good enough.
Yes.
Then later on will be B1 ward,
Okay.
and then A ward in public hospital, and then private hospital. So just make sure that when you buy the IP plan, it corresponds to that. I noticed that some insurance company offers different category for private hospitals.
Yes, I noticed that. Yeah.
Yes, some actually covers all inclusive, everything, or some are just preferred. Only certain hospitals are being covered. So just make sure that when you buy the IP plan, make sure that firstly it corresponds to your healthcare expectations, and secondly, if it's private, then make sure that it is you're aware whether it includes everything or not. It depends on your choice. Because of course, the one that is more restrictive will be cheaper.
Oh yes, of course, yes. The price you have to pay for flexibility.
That's right.
So, for someone who has been dutifully paying for a policy for 10 years, maybe more, and has never actually read it, is it too late for me to dust it off and spend time to read the details and think to myself, oh, maybe this is not the policy for me?
Okay, so it's good to familiarize this, because what we want to avoid is this. You want to only start looking when there's a need for claim.
Yes, correct.
Okay, then
which
it
is
will
all
be
of us.
too late.
Okay, what's
So
the repercussion of that?
Well, then it's too late. You can't buy any plans, and then you'll be subject to the term and conditions in the policy. So typically, let's say in your case, after 10 years, you decide to open up and just familiarize it. You can't exercise free look, but at least you know what is being covered. If the health is good, you find that you need to make changes to a plan, you can still do that.
That's true.
Okay.
Yep. I can jump ship.
Yeah, and the truth is our insurance needs actually changes over time. As we increase, as we earn more, our responsibility increase. We may have to load up more insurance. As we progress into retirement, maybe some of the old insurance policies you don't need it anymore.
Okay.
Yeah.
Okay.
For example, for some, the death critical may not be so important. Some whole life may not be so important.
Yeah.
Okay, so you can actually right size these plans and then get other plans. The most important thing is to firstly understand your policies, and if you're healthy, you can still do something about it.
Yeah, that's true. The other thing also, I think people sort of get into the habit of is incurring outstanding payments and fees. What do people often miss when it comes to premiums?
Okay, so I can think of two situations when we describe that. Firstly, when the premium is due and the person forget to pay the premiums, okay, usually there's a 30 days grace period.
Yeah.
Okay, so within this 30 days grace period, even though you have missed the deadline, okay, and you pay within the 30 days, the insurance company will just will not pursue further. You just continue the plans. Okay, so after the 30 days grace period, the policy will lapse. Okay, after it lapse, you typically has up to 12 months. I think I have to check the different policies. So typically it's 12 months. Okay, you can reinstate the policy.
Oh, okay.
Within this 12 months, you can reinstate.
Got it.
But when you reinstate, the insurance company will redo the underwriting, will do a health check, and if
so if you're not healthy during the 12 months,
they may
reject you.
They may reject, or they put in some loaded exclusion.
Yes, okay. So I'm being guilty of that. When I was a freelancer, I've allowed some of my policies to lapse, but because I stayed healthy, there was no issue having my policies reinstated. So it feels like I never left. It feels like I never was uninsured in that way, right?
Yes.
So what about that period, right? That transition period where the policy has lapsed, but then it gets reinstated. That period of nothingness, that void, does that mean I'm actually uninsured during that period?
Yes.
Okay.
Yes, you'll be uninsured for that period.
So there's no backdating, there's no retroactive coverage, nothing like that, right? You can't do anything
because
about that.
if there's a need of claim, then firstly the insurance company will not offer.
Understood.
Okay, so the second part is that suppose I have a whole life plan, a cash value plan.
Got it.
Okay. Policy with cash value. I forget to pay the premiums.
Yep.
Okay. And it has cost 1 year. It has cost the grace period.
Yeah.
Because there is a cash value in the policy, the insurance company will not lapse your policy Under that is the rights of the policyholders. Okay, it is the insurance company will take the cash value and then pay the premiums.
So it offsets it for you
Yes.
because you already signed up for a cash plan.
But it's not so straightforward. Actually, what it happens is that the insurance company will actually lend you the money
Okay.
using the cash value as a collateral.
So how does that affect my final yield?
Yes, it'll be quite bad.
It will erode my...
So, for example, let's say you have a whole life plan,
Yeah.
and then maybe not you. Somebody has a whole life plan, and then there's cash value of $20,000. Okay, you missed the premium. The premium is $2,000. Okay, the insurance company, because you have the $20,000.
Yep.
Okay, they will lend you $2,000.
Okay.
They lend you.
Yeah.
They don't deduct.
Yeah.
They lend you
Okay.
with interest.
Oh, wow. Okay.
So they will lend you the $2,000, pay the premiums, and then they'll charge an interest. The interest, it could be 6%.
Oh, wow.
Depends on insurance. How the insurance priced it? It could be around that price. Around that, it could be in the past. It was as high as 9%.
Wow.
So what it means is that every time if you forget to pay, they will keep lending you, and then they charge interest.
So the interest is the penalty lah in that
Yes.
sense, right?
Yes. So it actually depletes. It will deplete your cash value.
Is there a way to make it back?
You have to pay back.
So you can top up more, right, if you want
You
to.
pay back what you loan plus the interest.
Okay.
Then you square off. Yes.
Okay. So there is a way out. There's an exit strategy.
So, so if you realize that you have not been paying the premiums for years, and then the policy keep continuing, you better watch out.
Oh, wow. Yes, because you could chalk up like years worth of like
it's
debt.
not worth it. Yeah.
You end up in debt
Yes.
essentially, right?
No. You will if there's not insufficient cash value, the policy will lapse.
Okay. So there is a limit.
But you think about it, the policy will probably give a return about 2%, 3%. Okay, and the interest rate is charging you about 6%.
That's
So you're worse off.
you're losing. You're
Yes.
really on the losing end.
That's right.
That's scary. Thank you for that. I'm gonna check my policies now. Eddie, thank you for sitting here and really biting the bullet with us to pass the fine print. We really appreciate it.
You're welcome. It's my joy to be here.
Yes,
thank
it's a pleasure to have you as well. And thank you, our Money Talks community, for tuning in as always. I want to leave you with a question now. What is the one clause in your policy that you are most worried about after you found it in the fine print? I bet you're going to go home and chew on that now. Let us know in the comments section on wherever you're listening to us from. Or you can also email us directly, cnapodcasts@mediacorp.com.sg. This has been the Money Talks podcast. I'm Andrea Heng.